OPEC set the oil market on fire by announcing the production cut of 1 million barrels of oil per day beginning in May. And while experts weren't surprised by the announcement of the cut, the size of the cut was a little unexpected. But is the cut a buying opportunity for investors? It just might be. So let's talk about it. All right, guys, so we saw the news about OPEC's decision to cut oil production. Obviously, there's going to be an economic impact with that, but what can we expect? What does this mean for the fight against inflation? I think it's pretty concerning for investors that are already worried about the outlook for the year ahead, isn't it?
Yeah, it is. This is pretty concerning for investors. Me and Chris were just talking about it, and general opinion is that inflation would have spiked with the supply chain issues and all the demand driven by the pandemic, but it would have subsided without the rise of oil prices. Oil prices are an input cost at all levels of the economy, and it just makes it more expensive to do everything. And the rise in oil prices is what has sustained inflation at the high single-digit rate that it's been for the last 2 years. Now that oil prices are rising again, we can expect those negative feedback loops to redevelop and to become another cyclical event.
Chris, do you agree with Thomas? Usually you guys are pretty much on the same page, so I just want to check in there and see what you're thinking about it.
Yeah, I think everything that Thomas said is spot on. And I would also point out that we've got China reopening now too. And so there's no reason to believe that oil is going to be going down in price anytime soon. As a matter of fact, I actually think $100 oil is probably not out of the range of possibility here going into the summer.
That's a cautious estimate. OPEC's cut has been targeted to keep production growth below demand growth, and that is absolutely a bullish driver of price action.
Mm-hmm.
And so now we're in an event where like the scales are in favor of higher prices. So if anything happens in the oil market, if some militant person like interrupts production someplace, or if a ship sinks, or if there's a storm in the Gulf, oil prices will spike again because of production outlook again.
Yeah, that's true. I mean, we had a very mild hurricane season last year. This year, yeah, this is, it's a very bullish pattern right now for oil.
All right, so you guys mentioned some of the expected risks, but how can investors stay ahead of and manage those risks? The volatility, would that seem to keep a lot of investors away?
Yeah, I mean, it can. I'm not. There's a different way you're going to approach this if you're looking at it as a trader, somebody that's just looking to trade oil stock, or if you're looking from oil as a long-term investment. Right now, I'm looking at oil stocks. My predisposition is to look at things more as an investment as opposed to a trade. But there's things that you can do to reduce your risk a little bit. If you're not comfortable picking individual stocks, there are ETFs that you can invest in that specialize in the oil and gas industry. That would be a great alternative right now. The biggest thing to realize is that oil is always a cyclical industry. Right now, what Thomas and I are saying in the intro is right now, bullish cycle, and there's just no reason to believe that that's going to change anytime soon. So yes, prices are probably going to be volatile, but right now the trend is bullish.
Yeah. And the salient point though is that oil prices are at a level, even with volatility, that energy companies are going to be making what is classified as windfall profits. They're going to be making tons and tons of cash. They're going to be improving their balance sheet. They're going to be buying back shares. They're going to be increasing their dividends. They're going to be investing in the future, because the future is going to include a lot less oil and energy. So they're going to have to invest in these green technologies and more efficient technologies and prepare themselves for the future. And that just brings up an idea that there is a thing called peak oil. Eventually there will be, all the oil will be found, and there'll be less and less and less and less and less and less and less. Right. Mm-hmm. And in the scheme of green energy, they're really wanting to make peak oil be a reality now, even though there's still oil in the ground. Right. They want the production. They want the production to be less, so that it's more affordable to have an electric vehicles, so that's all part of the factor.
Right. So why is now a good time for investors to buy oil stocks? Which ones are on your guys' radar? I think we'd like to also know how you found them, why they have appeal for investors.
Well, I'll start because Chris brought up the ETFs, and ETFs are a great way to invest in the sector. You get a lot of diversification. You're going to own all the stock that we talk about. My thought in that is the XLE ETF tends to yield as a dividend, and I'm a dividend investor, a lot less than the higher yielding stocks in the group. And so if you just look in the top 5 holdings in the XLE ETF and pick out 2 or 3 of those, you can improve your yield by 2 or 3% probably. Because I know CVX and Exxon are both yielding probably 4 or 5% right now. I need to look to make sure, but they're definitely yielding above the XLE ETF.
Yeah.
So, you trade off some safety with an ETF, but you might also trade off some yield and some return.
Yeah, Lacey, you and I have talked before about Chevron. That's one that I personally own. If you're going to be looking at an oil stock, I like Chevron for a lot of the reasons that Thomas was just talking about. Strong balance sheet. They pay a very reliable dividend. They just increased that dividend in January, so investors shouldn't expect any more dividend increases in calendar year 2023, but the dividend's also not in any danger. And I also, one thing I love about Chevron is, to Thomas's point about oil companies right now are looking towards the future, Chevron's taking what I would call a measure twice, cut once approach to renewable energy. They're not saying that it's not a reality. They're just sort of they're taking a look at the landscape and trying to decide where it's going to be best for them to deploy this large amount of capital, as Thomas would say, the windfall profits, and where to deploy that to make an impact in the renewable future. Because right now, it's sad, really, because we've got this zero-sum approach, and we say you've either got to be on this side or you've got to be on this side. And the reality is, if ever there was a time that you need both right now. You need the fossil fuels to build out the renewable energy infrastructure. Right. And yes, eventually renewables are going to be more efficient. And that's probably the best reason for us to be looking to get to the lower carbon futures, because of the efficiency it's going to provide. So my hot take would be, if you're really supporting climate change right now, you want to be all in on fossil fuels to get that infrastructure built out as quickly as possible.
Right. Those are the guys that have the money to build those facilities. You've got the hydrogen companies building out their facilities, but they don't really have the cash to build out the large scale facilities that we need to create enough hydrogen for it to really be a viable energy source.
Yeah, hydrogen's fascinating to me, but you're right. A lot of the companies, I'm like, am I going to really invest in these? I'm not sure. I'm not sure. At the end of the day, I don't know who's going to make it across the finish line there. That's,
Right. But speaking of individuals, sorry, Lacey, but I want to bring up one more thing.
Yeah, tell us what you got.
For individual stocks, Occidental Petroleum is looking pretty hot.
Yes.
It's not the best yield. It's not the best value. It's reporting the same as everybody else is. It's got the same kind of view of the future. But what sets it apart is that Warren Buffett is buying it. Warren Buffett, maybe he's wrong, but out of all of the energy stocks that there are, the most closely watched investor in the world is buying this one. So this is the one that probably has the best opportunity for investors. I mean, that's just the only way. It's just the best way to put it. I mean, it's got cash flow, it's got dividends, it's got repurchases, it's got balance sheet, and it's got Warren Buffett. So
absolutely.
All right, well, it sounds like we have some strong options for those looking to invest in the oil industry. With these companies' strong balance sheets, strategic plans for growth, they're well positioned to weather the current market conditions and provide long-term value for investors. Let us know in the comments down below if you like the style of this video, if you want to see more of this. I really enjoyed having you both on here with me today. Thank you guys, and we'll chat soon.
Thank you, Lacey.
Yeah, thanks, Lacey. It was fun.